Government is being successful at the strategy of good money management. Measures to contain public expenditure and improve tax reform are bearing fruit.
Fiscal performance continues to achieve and support the debt reduction objectives. External accounts are improving. Economic growth is continuing.
The latest figures for key economic indicators show improvement in the net international reserves (NIR) and the primary surplus. Net international reserves at the end of September stood at approximately $2.2 billion, which surpassed the IMF target of $972 million. Why is that good? Well, the NIR represents contingency funds that the country can use to survive severe external shocks and cope with shifts in investor confidence and natural disasters. While the reserves are not credited to the country's revenues, they provide confidence to the markets that external obligations can be met. In particular, a country's reserve holdings represent an implicit guarantee that the national debt will continue to be serviced, even in situations where access to new borrowing may be curtailed or become very costly. This is a critical part of government's strategy to maintain fiscal prudence and a credible macroeconomic program. Another important aspect of a credible macroeconomic program is earning more than you spend. Economic figures for April to August 2014 showed that Jamaica's tax revenue exceeded the programmed spending, resulting in a cumulative primary surplus of $28 billion. This is 13.9% better than the $24.6 billion that was budgeted.
We have to address our debt problem, which is choking us. All of this primary surplus, let's look back on these numbers. $28 billion of primary surplus that we are generating for 5 months in a year is going to pay debt.
Debt servicing and debt reduction is important because over time, this will free up funds that can support capital development projects and key public services.
We have to lighten the load of debt before we can really begin to reap all of the benefits of strong growth.
That also means reducing the fiscal deficit, that's the gap between earnings and debt. Between April and August 2014, Jamaica's fiscal deficit was 16% better than budgeted. Related to the lower than expected fiscal deficit is the fact that government continues to be prudent with expenditure and spent $10.3 billion less than budgeted in the April to August period. The amount compensated for a shortfall of $5.9 billion in revenues and grants. Maintaining the extended fund facility with the International Monetary Fund is another important part of government's strategy to maintain fiscal prudence, and by all indications, it's working.
The IMF board, as you know, approved the 5th review of Jamaica under the extended fund facility. The Statistical Institute released the GDP numbers for the quarter April to June. And it shows that the economy grew by 1.8%, which is a little stronger than was expected. And that comes on the back of 1.6% for the January to March quarter. Just to note that this is the 4th consecutive quarter of growth since the IMF agreement was signed last year.
Government's prudent fiscal actions are also endorsed by international rating agency Standard & Poor's. In September, the agency reaffirmed Jamaica's B rating and upgraded the outlook from stable to positive based on the strong fiscal performance and NIR growth.
Even when you sit with the private sector people, you hear of investments going on. So I believe that that momentum is building. And you will see if Jamaica continues to perform in a steady way, I believe you will see investments pick up steadily year by year also.
The government of Jamaica is committed to continuing the extensive program of reforms of tax and public sector financial management, of the public sector modernization, of labor market reforms, all of which are important elements.
Government in action, containing public expenditure, eliminating waste and cutting the debt, all to create a platform for robust economic growth.